The market pulls back as expected, then pushes higher. We now have clear parameters on how to proceed. This is Invest with Jacob. So the suits up there at Wall Street must be watching my videos every day because they continue to follow our plan to a T. They pulled back, bouncing off the 50% fib last night before making new all-time highs and giving us clear parameters on what to expect next. We'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, so the market followed our plan perfectly, pulling back and then making new all-time highs starting up in Wave 5. We now know exactly what to look for on the chart so that we can make our trade when it presents itself. So to see this more clearly, let's jump into the chart and take a look. Okay, guys, so here we are on the 5-minute futures chart. And we know I like to trade the futures because you get the after-hours action and you don't have all those gaps in there from the overnights of the cash market. So we are on the futures chart, and on Sunday night, they pulled back and they hit that 50% fib at 43.75 and bounced perfectly as we expected, raced up to make new all-time highs, and we're now staring down our two targets above. So I said in the intro, we now have clear parameters. So let's look at those, starting with the parameters to the upside. The first thing we're watching is 44.22. This is the 1.0 extension of A, meaning that this C wave would be the exact same length as the A wave. And in Elliott Wave Theory, that is the most common for corrective waves, where A equals C in length. So the 1.0 extension would put us exactly at 44.22. Now, I don't believe that is the target we're going to hit. I actually believe we're going to hit 44.40, and 44.40 happens to be the 1.618 extension of waves A and B. Now, there are a few things about that that are noteworthy. First, the 1.618 extension is the second most common target hit in corrective C waves. Okay, so that makes it a viable option. The second thing is, if you've been watching my videos, you know that last Monday when we had the pullback, okay, we missed our 44.40 target on the way up in wave 3. And I told you that when that happens, it's very common for the B wave to go hit that target in an expanded form. And here we are making new all-time highs and looking that target right in the face. So there were some guys in the chat room that asked about higher targets than this. What if we have more upside? I don't see more upside right now. However, it's always possible. The market gets to do what the market wants. But we'll cross that bridge when we get to it. I really believe this market is, this rally is running on fumes, and it's going to go ahead and push up to its minimum target of 44.22. But I really think it'll push on up to here before it starts its C wave pullback. And I kind of think it's going to do it one of two ways. Either we rally up tomorrow and Wednesday before the Fed meeting and then use the Fed meeting to crash us down, or we kind of stay flat tomorrow and Wednesday, or maybe even pull back a little bit. We'll get into that on the other side of the parameters. And then once the Fed meeting happens, they use that as fuel to accelerate it up to the target, hit that target, and then crash down. Either way, I see it hitting this 44.40 level and pulling back. So what are the clear parameters to the downside? Well, with this pullback here, hitting the 50% fib and making new highs, all right, it gives us a clear support zone and a break zone. Okay, so this box here is our support zone. It starts at 43.83 and it goes down to 43.75. So it's the 38.2% retrace of this wave, as well as the 50% being the bottom. And that's the low, okay, from Sunday night in the futures market. And if we break this low from Sunday night, it's highly likely that we've started the C wave down. So we're watching any pullback to make sure it holds this green box and then still rallies higher up in 5. And it can pull all the way back down to this box. That's an acceptable pullback and then push forward. But if it breaks this low, it's highly likely that we are starting this C wave down towards 41.65. Okay? Now, what we're looking to do, because we've got the upside is kind of done here, there's only a little bit more upside left. What we're looking to do is find this top and then get the 1-2 move down. So let's see what that looks like so that we can understand what trade we're getting ready to make when the downside comes. Okay, so first we have to understand that C waves are 5-wave corrective movements. Okay, so they're the only corrective wave that does end up in 5 waves, and that is true of each of the legs of a correction. So an A wave is made up of an A, B, C, and that C wave of A is 5 waves long. You're seeing right now we're in the B wave up of this correction, and this C wave up, okay, it's 5 waves You can see 1, 2, 3, 4, 5. It's 5 waves. So this C wave down, okay, this pullback we're going to see here, that we hope to see here towards 41.65, all right, that's going to be a 5 wave movement. And if you've been watching the channel for a while, or you know much about Elliott Wave, you know that wave 3 of 3 is the best to trade going up, and wave 3 of C is the best to trade going down. So let's look at why that is. Okay, so we're going to have a 5 wave movement down. So let's say you get, wave 1 down to the below the green box here to signify that C has started. Wave 2 back up to like here. I'm not measuring this, I'm just putting it on here. We're looking to catch the top of this wave 2, okay, for the 3 down, because there will be the biggest, strongest wave, all right, and it'll be like an elevator down if we catch it right. So the beauty of the trade is you have about 200 points of downside reward here if you hit it correctly, whereas your risk is just if this wave ends up taking out this B wave and making a new all-time high, we know that this trade in this C wave has invalidated and failed. So we know to get out of our trade right there. So we have a very clear parameter to exit our trade, and it's 30, 40 points of risk to the high side, whereas it's 200 points of gain to the downside. So it's a really good risk-reward trade to trade a big corrective C wave, which is what we're looking to do here. So that's why C wave trades are so powerful if they're done on bigger corrections. Guys, you shouldn't be trying to short bull markets hardly ever, but this is going to be a 200 plus point move down, so it's big enough that you can capture a good portion of it and make good money on that trade. Whereas most of the pullbacks, 1, don't even hit their target because the bull market's been so strong, and 2, are so choppy that it's really hard to catch them in the right place. So I highly advise against shorting in this market. Okay, so that's what we're watching for. That's our clear parameters. That is the setup that we have coming for us here in the next few days. Guys, if you like the information that I put out and you want real-time trading updates from me, you need to get in my Facebook group. There's a link down in the description. Go ahead and click that link to get into my Facebook group. Once you're in there, if you go into the announcements section of that Facebook group, there's a link to Slack. Okay, Slack is just a chat channel. Click on that, and in there we have a great group of guys in there. I give real-time market updates. I give all of our buy and sell alerts for the market, and I answer all of your questions about the S&P 500. As of right now, that's the only index I cover. I'm hoping to add more later, but I will answer any question you have about trading or anything else in there, guys. So there is just one thing I ask for before you can get in my Facebook group. You got to subscribe to the channel, guys. You got to hit that subscribe button down below. Go ahead and subscribe, get in my Facebook group, come over to our Slack channel. There's a lot of good guys in there making money right now. So let's get you in there. Let's make some money together. Subscribe to this channel. Guys, we'd love to have you in there. Okay, guys, key takeaways for today. We're watching the upside to 44.22 first and then 44.40. And the downside target is this low from Sunday night at 43.75. Okay, very clear parameters. If it breaks 43.75, we're likely in C down. If it hits up to 44.22 and 44.40, we're looking at topping action to pull back and start C down from there. That is the market update for today. I will talk to you tomorrow.